You're entering the future-ready CNBC TV18 EBIX Cash Studio.
Hello and welcome to a halftime report from the CNBC TV18 EBIX Cash Studio. I'm Sumaira Abdi and with me is Ekta Batra, who's joining in from home. Hi Ekta. Well, we're seeing mixed trends today for the market. So on the frontline end of things, we're seeing a bit of green. But the broader market looks like, they're not joining this year-end party. So they're going with Ekta's color. Hi, Ekta.
Hi, Sumaira. Well, I'm not wearing red. It's actually pink. But nonetheless, yes, I get your point. It is turning out to be a session where there is definitely some amount of trepidation which is stepping in. Though Omicron is expected to be a much milder variant, there are fears in terms of how exactly it could probably impact all of those unlocked trade stocks. But nonetheless, as of now, quiet session, participation muted also because it's New Year week. So that's also one of the reasons why you're seeing such quiet trade. Stock-specific action, however, continues. So we're just going to name a couple of stocks. RBL Bank, for example, is under pressure today. It has been the entire week. Puravankara also has lost out quite a bit, and Delta Corp 2 is down around 3 to 4%. But on the upside, just watch out for stocks such as Graphite India, which is managing to gain within the broader markets. And obviously, I can't not talk about the healthcare space. Narayana Health, Thyrocare would be just prime examples of follow-on buying taking place in the hospital and diagnostic space. Sumaira.
All right, so let's get started with some stocks which are making news. RBL Bank remains, top of mind recall. The stock is under pressure as news reports suggest that the key reason for RBI's intervention was actually a 300 crore rupee loan which was written off within 7 months of being sanctioned. Abhishek joins in to explain, what's really gone on there. Abhishek.
Well, news report do suggest that a rupees 300 crore loan was written off in 7 months of being sanctioned by RBL Bank. So it was one of the key reasons why the regulator, that is RBI, did sudden intervention in the bank. Given the fact that, loan was given as part of consortium of lenders in 2018. However, RBI has been seeking details about the exposure for past few months from the risk department of RBL Bank. So on 25th December, Yogesh Dayal, who is now the RBI appointed additional director in the bank, did say that the continuation of CEO, that is Vishwavir Ahuja, has become untenable. Now RBI would have had no choice but to supersede the board like it did in the case of Yes Bank and Lakshmi Vilas Bank if at all Ahuja didn't step down immediately. So Ahuja was to leave by the end of Saturday. We did reach out to the management and the management did reply to us that they refuse to comment on this development or this story. Back to you.
Okay, all right, Abhishek. Thanks very much for that. RBL Bank, as you can see, has lost over 20% of its market cap this week itself, and not to mention over 40% on a year-to-date basis. So extremely weak in terms of performance. We do have some news coming in from Indigo, so just watch out for it. The conclusion or the result of the EGM will be uploaded in the next 2 working days, so that will be a stock to focus on. The EGM was slotted today and that has concluded. It was a virtual EGM that took place. But let's in fact move on then. BSE is under pressure. This is after Investec has downgraded the stock from a hold call to a sell call. Nimesh is tracking the story and joins in with more. Nimesh.
Hi, Ekta. So, if you look at it, 2021 was a year for platform companies, and so the case with BSE as well. It's a big move in 2021. But after the big move, now the valuations have turned expensive, and that's the reason why Investec has gone ahead and downgraded the stock to a sell now from hold. They have a target price of 1720. Not big downside from current levels, but yes, they have a concerns on valuations. That's the first part. Second, they believe the cyclical earnings are peaking out and the valuations are untenable. In fact, for FY23, Investec is expecting a sequential decline in earnings as well. And BSE, after the big up move, is now is trading at an expensive premium compared to the global peers. So on FY23 estimated earnings, BSE is now trading at 45 times price to earnings, whereas if you look at the global exchanges on an average, they're trading at close to 24 times. So on back of expensive valuations and expecting a sequential decline in earnings, there is a downgrade on BSE from Investec to a sell now with a target price of 1720.
Nimesh, thanks very much for bringing us that news. Also, First Source is in focus. The company has announced the acquisition of American Recovery Service for $53 million in an all-cash deal. Rima will tell us, what this means for the company. Rima.
Thanks so much for that. So the acquired company, American Recovery Service, is a U.S. legal collection service provider, and this acquisition will strengthen First Source debt collection capabilities. As you pointed out correctly, this is a 100% stake, that the company has acquired. The total payout will be $53 million, which will be paid in cash, and the acquired company had revenues of $72.5 million. Now, just a quick word about the company First Source. The stock has done well in 2021 with a return of nearly 85%. This is the second acquisition that First Source has done in the last 2 months. In November, the company had acquired a company called the Stonehill Group, TSG, which was also in the US mortgage space, but it focused more on quality control as well as due diligence. But this mortgage business for First Source is expected to be soft. We are entering into rising interest rate environment, and at such times refinancing is typically low, which is an area which First Source specializes in. And this banking and financial services nearly 50% of the company's revenues. If you remember, in the second quarter, the company had cut its revenue guidance from 15 to 18% to 14.5% to 15.5% space. But the company is clearly looking at ramping up this mortgage business, is looking at strengthening its collection capabilities, and this acquisition is geared in that direction. Back to you.
All right, Rima, thanks very much for that. Also, the recently listed company Supriya Life is buzzing for the third straight session. Ekta is here with a quick check on the valuations. Ekta.
Thanks for that. Well, yes, Supriya Life is really making headlines because it is up third day in a row since listing. It's up over 70% from its issue price of 274 rupees. So just a quick valuation check. It is trading now at around 29 times FY21 trailing PE versus 16 times its issue price of 274 rupees. Remember, it came in at a discount as compared to its peers. Now it's also trading at approximately 26 to 27 times FY22 PE versus 15 times at its issue price of 274 rupees. Now, if you compare it versus its peers on a trailing FY22 basis, or rather FY22 basis 1 year forward, Supriya Life is now caught up with the likes of Solara and Aarti Drugs, which are both at around 26 times, and now Supriya Life at the same level in terms of valuations. But Divi's obviously is the sector leader, which is at around 45 to 46 times.
All right, and here's a CNBC TV18 exclusive. We learned from sources that the GST Council will hold their 46th meet tomorrow at 11 a.m. Tim C brings in a heads up. Tim C.
Well, the GST Council is likely to meet tomorrow. The government, actually the GST Secretariat, issued an urgent notice yesterday calling all the state finance ministers physically here in Delhi for the 46th GST Council meeting. Important to note, what could be possible agenda? Well, there's a talk that the agenda could be reworking the duties that were hiked on textile and footwear. Remember, in the last council meeting, GST Council had decided to correct the inverted duty structure on the textile sector by increasing the rate from 5% to 12%, and on footwear below 1,000 rupees per pair, again from 5% to 12% to bring parity in the footwear sector. That is something that trade associations, apparel manufacturing associations, footwear associations, traders, etc. across India have been actually writing to the government to rethink on this particular decision, to defer if possible, because the levies will kick in from 1st of January and it is going to impact their industry substantially. That's what they say. Apart from that, also important to note, 1st of January would mean 5% levy that is being shifted from restaurants to food aggregators on supply of food, which will be charged from the consumer. That is also something very crucial because all these food aggregator apps, Swiggy, Zomato, etc., have made their detailed representation to the finance ministry. So let's see if there's a rethink on any of these three parameters. Apart from that, GST compensation, states are facing the heat again because they are now supposed to put forward their state-specific budgets. So that is something that will also likely to be discussed. Apart from that, as we speak today, there is a pre-budget meeting with states where again all these issues will be taken up by the states, as we heard from various state finance ministers. Back to you.
Okay, all right, Timsi, thanks very much for that. But let's stay with this story and let's go across to Mangalam on the textile piece, because textile manufacturers, merchants, traders have opposed the rate hikes on textile from 5 to 12%, which is with effect from Jan 1st, 2022. He has more details on this, Mangalam.
That's correct. So the textile manufacturers, merchants, as well as traders have all been up in arms against this GST hike from 5% to 12%, which the government calls rationalization. Remember, they've been protesting this ever since the notification was first made in September and then in November itself. And that's because GST rates currently are at 5% for cotton, fabric, as well as garments, all garments. And for man-made as well, fiber as well as man-made yarn, it is close to around 12% to 18%. 85% of the industry is currently at 5%. So understandably, this 85% is not pretty happy with this rise. Why is that? Because I spoke to the chairman of ICC Textile Committee, which is an industry federation. They say that if this were to happen, the prices may increase by further 6 to 7% for the end consumers. And that's not good in a year where garment prices have anyways increased by close to around 23 to 25% because we've seen a big rise in cotton prices. So input cost inflation has hurt them as well. Cotton is up 70% this year and yarn is up 65% up this year. So any impact or any increase in GST will only hurt the consumer. That's not all. An important point that the industry also makes is that, at 5%, it was viable for players to go ahead, the unorganized players, to go ahead and pay taxes and become formalized and enter the tax net. But if this is increased to 12%, then the arbitrage increases for them and they may slip out of the GST net rate if, the rate is increased, and that would defeat the purpose as a whole. But overall, what Timsi said about the emergency meeting that has been called tomorrow, if that really happens and the rates are rationalized as the traders are expecting or the merchants are expecting, that would be a positive because it does offer some hope to them.
All right, Mangalam, thanks for that. In fact, Delhi Deputy Chief Minister Manish Sisodia voiced his concerns as well on the delayed GST compensation, and he has opposed the GST hike on textiles.
बजट के लिए वित्त मंत्री जी ने मीटिंग बुलाई है और सारे देश के राज्यों के लिए एक सबसे बड़ी समस्या है जीएसटी का कंपनसेशन, क्योंकि केंद्र सरकार के कहने पर सभी राज्यों ने अपने टैक्सिंग राइट सरेंडर किए थे जीएसटी काउंसिल में, और देखने में आया कि राज्यों के कर नहीं बढ़े हैं जैसा जीएसटी के समय में प्रॉमिस किया गया था। तो सभी राज्य, निश्चित रूप से दिल्ली की तरफ से हम केंद्र सरकार से रिक्वेस्ट कर रहे हैं कि जीएसटी कंपनसेशन आगे बढ़ाया जाए, और मुख्यमंत्री जी ने भी इसके लिए चिट्ठी लिखी है, लेकिन जीएसटी कंपनसेशन आगे बढ़ाना हमारी सबसे पहली मांग है। मुझे लगता है ये फैसला जो 5% से बढ़ा के 12% किया गया था, ये ठीक नहीं किया गया, क्योंकि हम ये सोचें कि 1000 रुपये, एक आम आदमी 1000 रुपये की शर्ट खरीदेगा या 1000 रुपये के कुल मिला के पैंट शर्ट या अपनी वाइफ के लिए कपड़े खरीद के लाएगा परिवार के लिए, और वो फिर 120 रुपये टैक्स दे के आएगा उस पर, तो ये आम आदमी के लिहाज से बहुत ज़्यादा है।
Okay, well, that's a story that we'll be tracking, the GST Council meet. As of now, we need to take a break with the news that the mid-caps continue to be under pressure. So down around 0.4%, Nifty holding up with a gain of around 18 odd points. Take a break and be back. Stay tuned.